Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So let's take a look again at the euro currency. Well, yesterday we have a thin trading session since it was the Memorial Day in the United States, and the market in fact has formed small candle. It's just inside trading session to this Friday action. Now today we see some growing activity, and the market has shown already the plunge down, returns right back. So probably today we should see some more signs and clarification of further market development. Well, in the daily time frame, it's in fact not much to comment. It's a couple of moments to watch for. First of all, as we have decided in our weekly research, we will treat this action as the stop grabber, mostly by its nature and the patterns that now are forming on the intraday charts. And also, since some of you guys that have the different data providers, different quotes from the other brokers, you said on the forum that you have the stop grabber since this close was lower than the MACD predictor line. But by LPRA UK, here in fact, to be absolutely honest, there is not the stop grabber. But we have the stop grabber on the gold market. And in fact, that's why I do not like to trade on the spot forex, since I prefer to trade on the futures, since there you have definitely you definitely either have the stop grabber or not, because there are only one data provider, that is exchange. But on the forex market there are a lot of different brokers, a lot of different data providers, so that's why some of you have the stop grabbers, some others don't. Well, that's the first moment. Second moment to watch for, take a look how price action now is developing. So market has shown some gravitation to the downside, and in fact if we will see today and tomorrow some creeping action with this MACD predictor line to the downside. Well, you can see that trend now has shifted to the bullish side, but market action doesn't show any acceleration to the upside, and if market will continue to creep lower, that will be an indication of the bearish dynamic pressure, and this sooner or later will lead to some fast downward acceleration and taking out of these lows. That's the moment to keep an eye on the daily time frame in the nearest trading sessions, because it could give us significant assistance in understanding on the overall situation on the daily time frame. So in fact, I do not see anything more here. Our trading plan is still valid, since our invalidation point right here still holds. Market hasn't returned right back inside of this high consolidation, hasn't broken this resistance. So that's why all that we have said in our weekly research now are still valid. On the intraday chart, on the 4-hour time frame, in fact, I don't see nothing to comment here as well. So you can see market yesterday's action was really flat. It's just very small candles. There's no range, in fact. So just some kind of this sideways action. That is our invalidation point. That's our targets. Recall that we mostly point on 126.75 area, because there are a lot of stops were placed, since this is previous swing low on the daily time frame. If market will touch them, it will be some acceleration to the downside due to these stop orders, and market probably should hit 1618 extension at minimum. It's around 126.75 area. That's probably the target of our butterfly, because hardly market will leave intact the stops that has been placed right below 127 extension. So probably market will try to trigger it and fly to the 126.75 area. Trend has shifted bearish on the 4-hour time frame. You can see this. Most interesting for us is the hourly time frame currently. So what do we see here? First of all, take a look at this hour head and shoulders pattern. Due to the Memorial Day, this right shoulder was a bit extended. As you can see, this yesterday's flat action, as you can see, a bit skewed pattern. But today, market has shown the plunge down, starting to move below the broken Dirichlet neckline. Also, market has moved below the weekly pivot point, this thick blue line. Now it returns right back. And take a look, the high of this most recent candle stands precisely at the neckline. So that is some sort of the retesting broken line. What is more significant for us in the nearest hours is that, take a look, neckline coincides with the MA30 predictor. And now market is forming the stop grabber, bearish stop grabber. If this pattern will be formed and market shows bounce down again from this trend line, it simultaneously will give you two confirmations. First of all, the stop grabber should lead at minimum to these lows. It will be the minimum target, so the scalpers, you could try to enter short with this swing, with this candle, with the target right here. That will be a nice trade based on the stop grabber pattern, if it will be confirmed by the close price of this candle. The second moment is that this could be some sort of the kiss goodbye of this line. So market has broken it, retested, and starts move down. That's absolutely normal. It's very theoretically very good picture if this will happen. That could happen. Besides, some acceleration down will lead to the start move down based on this butterfly, because currently you can see this flat action is a bit not very common for development of the butterfly patterns. So we would like to see here some downward action that we do not have yet currently. And finally, on the daily time frame, that could lead to downward action, and that could lead to the bearish dynamic pressure on the daily time frame. That's why current moment is very significant. If market will shift trend to the bullish and return right back above this line, don't enter short, because that will be not quite normal for the downward development. And if you have entered short here, put your stop to the break even, because market should not exceed this current consolidation. Of course, it could do this, and for instance, returns right back, stands for a consolidation in this area, then returns right down. But we can't say it definitely, we can't predict it. I just can treat only the setup that we have now, because if market will return right back, this will be also some kind of the wash and rinse. So take a look, that is some support line right here at these lows. Market just move to the downside, returns right back, clear out of these lows, returns right back. That will be, it's a bit some short-term bullish sign, and that will increase the risk of the cancelling of our bearish setup, overall bearish setup, returning of market inside of this consolidation, especially if it will continue to move higher. So if you do not have short position right now, wait for the confirmation. At minimum, wait for the stop grabber that will let you to place tight stop. If you have the short position, put your stop to the break even if you have entered, as we suggested, at the top of the right shoulder yesterday. So that's 2 moments to watch for. So let's see what market will show us on today's trading session, because current development could be rather intriguing. Okay, so because currently it's rather interesting moments are developing here, and I hope that we still will get our downward action that we have discussed in our weekly research. So don't be hasty today, since we need some clear signs that market will start move down. So keep an eye on the nearest hours on this development in this area, right at neckline, and how market will behave with this MACD predictor indicator.